Hi everyone, welcome to Single Value. So today I want to talk about Affirm. This is a company coming onto the markets on the 13th of January, and it is specializing in the buy now pay later space, which is disrupting the credit card industry. Basically this company is providing a much more simplified and more transparent way of delaying payments for goods that you want to purchase today, because before that you couldn't really purchase goods without putting it on your credit card or paying upfront in cash or going into these really dodgy lease options. So I really like the whole buy now pay later space because it's simplified, it just provides so much transparency, and it still gives the consumer a lot of options in terms of how they want to purchase their goods and how they want to pay. So in terms of Affirm, they're looking at about $33 to $38 per share, which would give them an 8.1 to 9.4 billion valuation. Though, as it's put here, if we include our options, which if you don't know what options are, it gives the holder a right to purchase shares at a certain price, and if we include those options, the valuation can actually increase up to $10.5 to $12.1 billion. So I just want you to be aware of that as well, that hey, even though you might see an 8 to 9 billion valuation, on a fully diluted basis it's actually getting up to 10 to 12 billion in valuation. And if we look at a direct competitor of theirs, Afterpay, they are directly listed in the Australian stock market, but you can actually buy their shares in the US on the over-the-counter market, and that trades at about $24 billion. So I just want to tell you, just with the over-the-counter market, not actually everyone can buy into these stocks that are traded over the counter. They tend to be limited based on the service that you use. So you may not be able to buy it, you may be able to buy it. That's if you're interested in Afterpay itself, because I will be going through some direct statistics where you might be like, oh, actually I want to buy Afterpay instead of Affirm, and I guess that's some consideration for you. But today I'll just do some direct comparisons and focus on talking about Affirm a bit more. So in terms of Affirm's business model, as it's put, is it buy now and then pay later. In terms of how the business model works, it's like if you buy $1,000 of goods, you spread it over 3 months, and you pay $333 per month, and basically you pay no interest and no other fees. Whereas if you actually end up going with the other options and going, actually 3 months is a bit too short and the payments are too large, you can actually spread it out. But the minute you spread it out beyond 3 months, they charge a 15% interest rate, which in a way isn't as aggressive and isn't as bad as some other leasing options or credit card options. So in a way, it's still not too bad, and it provides the consumer with other options. Because at the end of the day, if you want to buy something today and pay it over 3 months, then it still benefits you as a consumer because you pay nothing extra. The merchant actually ends up paying the fee, though I've seen in some cases where the merchant actually passes the fee directly onto the consumer, that hey, if you pay with this option, you actually have to pay another few percent or something like that. So potentially you do have to pay a bit more by using this option. Some merchants do not make you pay that extra fee, and they just take it in themselves. So for a consumer, potentially they don't pay anything extra, or they could actually pay in these longer term options and they paid a 15% interest rate. And then if we go and look at Afterpay, they don't really have these extra options. They just have 4 easy payments, and that's spread over 2-week increments. So it's one payment every 2 weeks, which in a way it's a shorter time frame. But in a way, the payments are smaller in a way, because if we look at Affirm and we go, if you spend $1,000, you would actually have to pay $333 every month. Whereas with Afterpay, you'd be paying over four payments, which would be $250 every 2 weeks. And it might actually work better for a consumer that's actually not looking to spread it out too much, or they're not looking to have, I guess, to pay a large sum all of a sudden. So $250 might be more manageable than $333. So yeah, I think that's the main difference. Affirm has more options and it's paid monthly, whereas Afterpay is, you don't really have those extra options and you're paying every fortnight. And that's the main differences of these companies. In terms of the statistics, Affirm has 6.2 million consumers and 6,500 merchants, though merchants is a bit vague, because if, say, like, you sign a company like Nike, and that would be like one merchant, but whereas if you sign like the sporting goods store that only has like one location, that could also be one merchant. So again, the definition of merchant is so vague that I would take the merchant number with a grain of salt, and you would actually want to do a bit more research into, are the merchants quite large? But we already know with Affirm, they are a dominant player. They do have a lot of large merchants on their list, but I just want to be more detailed in this aspect to say, even if you have thousands of merchants, a lot of them could be small ones, as we will see with like Afterpay. Afterpay has like 63,800 merchants. 48,000 of them are based in Australia and New Zealand. And yeah, like there's a lot of merchants, but a lot of them will be quite small ones. Whereas they have 13,900 in the US, which is at least double what Affirm has, and nearly double the amount of consumers. So in a way, like, we're looking at Afterpay and we're going, okay, they're looking at about twice the size. But of course, we have to look at other metrics as well. Having customers is one thing, but what if the customers don't spend much? Then you're not really earning much either. And also having merchants, if they're not large merchants, then you don't really process a lot as well. In terms of gross merchant value that they process through their system, they've grown that by 77%. So it means they've managed to get a lot more people onto the platform and spending. And for the financial year 2020, they did about 4.6 billion in gross merchant value. So that's the amount of goods in terms of value, and they usually take a small percent of a cut of that. So if we look at Afterpay, just for the quarter one in 2021, well, financial year 2021, which actually starts in the middle of the year of 2020 in Australia. So in a way, the dates are slightly obscured. But of course, we're just going to do the metrics comparison anyway. In one quarter, Afterpay has about the same GMV, gross merchant value, as nearly Affirm. It took Affirm nearly a whole, it took them a whole year to get to 4.6, whereas with Afterpay, they do 4.1 just off the bat, just like that, in one quarter. So if we do that comparison, that is the strength that having more customers obviously provides. That they're going to be buying more, and more gross merchant value is going to be processed through your platform. So in terms of these metrics, like, we can see that Afterpay is by far in the lead in terms of these metrics. But we are looking at Afterpay and going, okay, they're about a $24 billion company, whereas Affirm's on a fully diluted basis is looking about a $12 billion company. So they are about twice the size. So in a direct comparison, the valuations kind of make a bit more sense, because they're worth twice as much, their metrics are twice as high. But I think one thing that really is more interesting actually is the revenue basis. That Affirm in 2020 did about $509 million, and for Afterpay they did about 519 million, but this 519 million is actually in Australian dollars as well, so it's actually quite a bit lower as well. If we look at that and we go, actually their revenue isn't actually as high because it is based in Australian dollars, which is much lower. And then if we look at Affirm and we go, how is this company with less customers less active customers and less merchants actually earning more revenue? It actually comes back to this business model where they actually charge an interest rate on their extra payments. So this little beauty of an option that they provide to the consumers as an extra actually earns them a significantly higher amount of money. So if we actually break it down and go, the merchant network store, which is basically every time the merchant sells something, they have to pay you a percentage. That's $256 million. And then with the virtual card network, in terms of they get 19 million from that, but that's the small change compared to what the main business, which is at 256. And that's the direct comparison here, where Afterpay doesn't have any extra options and actually does. I'll actually find this out for you because I guess it's probably a bit more better knowing the exact amount, knowing this. So in terms of 519 million, it's about 400 US dollars. So we're comparing 400 million, and we go, okay, 400 million is quite a bit higher than their 256, and it makes sense because they have so many more merchants and so many more active customers. Whereas Affirm has this beauty here where they earn interest income at $186 million. So that's the biggest difference. Also, there is a gain on sale of loans where if they manage to sell loans above the interest, the cost that they hold it at. So if they have a loan and then they have a certain interest rate and they manage to sell it off at a lower yield, they actually recognize that as a gain. And they actually do this a fair bit recently. And because I guess, especially with low interest rates, if you're managing to get 15% off some customers, you can actually sell it for less to someone else, because even at 10%, there are people that are willing to buy those loans off you, because 10% is substantially higher than what you might get at a bank, and there's going to be a lot of investors that are interested in this. And then it just builds up. So the beauty of this company is actually in the interest income, which if you look at Catapult, which was also coming onto the markets in a SPAC merger, was also doing something very similar, and hence why these companies actually look quite a bit more interesting. So even though we look at the statistics and go, Affirm statistics aren't actually as nice as like Afterpay, in terms of the revenue, Afterpay isn't as attractive as Affirm, because Affirm's just really figured out this way of earning more money through this interest kind of option where, hey, if you can't pay in 3 months, where you paid 0 interest, you can actually extend your options and start paying a 15% interest. And over time, that's proving to be a really, really good money earner, where it earns about 186 million compared to the 256. Afterpay would, if Afterpay had just, if Affirm had just been like Afterpay and focused on the current options, they'd be earning about 256 million. But because Affirm has that extra interest option, they earn this 186 million plus this 31 million, which is well over 200 million, which is a really, really good option and really, really intelligent to just focus towards that. I'm really surprised Afterpay hasn't actually started offering this, but because they're a global player, and I guess there's a bit of, there's more complications when you start offering an interest product. Then I guess, it's made it easier for Afterpay to expand. but in terms of Affirm, it's made them a bit of a cash cow when it comes to earning money. So if we do some comparison and we go, okay, Affirm, this is actually at say we do this at a 12 billion valuation. I would say that's still actually quite attractive in terms of value. I wouldn't say that they'd be worth more than Afterpay. Like, I think Afterpay has proven something really good, and at the current kind of view, it's all about trying to gain the most market share, put yourself on every merchant's website, and then afterwards, hey, if you wanted to offer more options, then you can. So in the future, Afterpay can always do that, and it could actually generate them a significantly higher value as well. So I wouldn't say Affirm's worth more than Afterpay, but I would say maybe a 20 billion valuation could be warranted. Like, even though like Afterpay is in Australia, in New Zealand, and in the UK, and also in the US, like their international footprint gives them a higher valuation in my view, and also because they've done more hard yards and they've proven themselves a lot more. Whereas Affirm is more based in the US, and I guess it's one of those things that, hey, well, it's still a brilliant company, but I don't think you're worth more than Afterpay. But I think you could be worth as much as $20 billion, which could well lead to around a 50% upside on the current valuations, if not more, because the market could get well excited about these things. And also because a lot of the buy now, pay later companies are actually listed in Australia. Even Cecil went to Australia, which is kind of weird because I kind of thought they'd just stay in the States and list in the States, but they've actually chosen Australia because they thought those investors understood the buy now, pay later space much more than the US market. So Affirm being one of the very few buy now, pay later options, like in terms of a listed company in the US, I guess it potentially gives them a little bit more of a higher valuation. So yeah, it could well trade higher than 20 billion, but I wouldn't say it was like the minute it trades above that, it gets a little bit too frothy. Like I like to buy something where I actually have a decent upside, and if it trades well above 20 billion, then it's definitely off my books. But I'd be definitely happy to pay around that 15 billion valuation, so at least I have some upside. If you buy anywhere near that 20 billion valuation, then your upside is getting very limited, and you're basically saying you're going to be a really long-term holder, and the company is, priced for success. Which is a little bit difficult to say if they're actually, pricing in that way. But the revenue growth is really good, going from 260 million to 509 million. I think the revenue growth is good. Customers enjoy the company. So again, the business is great. It just really depends on the valuation. And doing that comparison with Afterpay, I think you can see where Affirm has really done their homework, and been a bit more creative about the options that they want to offer. And hence why I say like Affirm is a bit of a cash cow, because they managed to find this whole new extra revenue stream off their interest, because you're able to get more revenue over the customer's lifetime. Because at the start, firstly, acquiring a new customer is a large cost, and it's a big mental barrier for getting that customer to come on, because firstly, a lot of customers do not know what buy now, pay later is, and as they're slowly convinced to get on to this platform and then try it out, they could buy one thing and then not come back ever again. So potentially, if they were Afterpay, the value they generate might not be as high, whereas with Affirm, based on their interest kind of options, you can actually have quite a long-term customer through that method, and actually it ends up being quite sticky in a way, because if I purchase a product and I pay over 6 months, and I was thinking about purchasing another product, I might just stay with Affirm because I already have an account with them and I already have payments with them. So why not just keep everything in one place? So potentially this extra option of paying interest over 6 months or 12 months actually increases the stickiness of the customer, and also just gives that massive opening for an extra revenue stream, which I'm really surprised Afterpay hasn't exploited. But who knows, they might have it in the works in the future. But in terms of that, that's my valuation of Firm. That hey, they're coming onto markets at an 8 to 9 billion valuation, but if it's fully diluted, have in mind it's about a 10 to 12 billion valuation, and with Afterpay trading at 24 billion, I think it has a good upside of that a firm could be worth as much as $20 billion. And I like the business very much. I think that's all that I really wanted to say. Let me know what your thoughts are, or if you have any questions. Hopefully we'll see how things go when they do come to the markets on the 13th of January. Hopefully the price has not been increased, as we've seen with a lot of IPOs that have been really popular. Hopefully 38 is the upper limit, though we never know. So we'll see how things go. Until then, good luck investing, everyone.